Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the one, the only GME, the leader of the meme and Reddit stocks. We're going to be talking about should you buy, hold, even look at this stock. So I hope you guys enjoy the episode, and if you guys get anything in value, hit that like button and subscribe to the channel. If you have any questions, concerns, ask them down in the comments. So we're gonna be just kind of starting from the get-go. GameStop, what is it? Well, GameStop has a variety of brick and mortar locations that sells anything from video games to entertainment stuff. So over the past couple of years, this stock in general really was losing value, right? It had highs here back in the day at about $14 or $15, sold off all the way down to about $2.57. And over the past couple of years, we've seen this slow and steady trend where the stock really just started to continue on this nice solid upward trend. But you can see this massive move where it really went from this $20 mark, and 3 weeks later, the stock was pushing $483 before immediately selling off from that $483 all the way down to about $70. And this was because of a massive short squeeze. So a ton of hedge funds were actually betting against GameStop and shorting the stock. Shorting is a way to pretty much bet against a stock. And how it works is you pretty much borrow the shares from your broker and you have to buy them back at the price that it's trading. But the thing about it is you have to buy them back. So no matter what, if that's just say this stock goes up to $1,000, you have to buy those shares back, and you can go in the negatives and all of that. That's one of the cons with shorting compared to going long or buying a stock, because if you're going long and you're just buying the stock, that's just say for $5, the worst that you're going to lose is that $5 if the company just goes completely bankrupt. But shorting, on the other hand, if this company takes off and starts making a lot of money and the stock value goes up, 1,000, 2,000%, you have to buy those shares back. So that's the thing about it, but you have to buy them back, which causes a massive short squeeze, causing the stock to pretty much go parabolic. And that's what we've seen. It went from 62 all the way to $483. And a ton of people made a ton of money off that move. Okay, as we continue to watch this, you can see it really didn't do much. It had another short squeeze in there and just slowly and steadily kind of had this little consolidation where it couldn't really break above this 350 mark. And it was really using this purple line here as some pretty hard support. You can see it tapped it several times and we got some support step in. It eventually sold off here and really has not been doing much ever since. So the main idea, should you buy this stock? Okay, so when I think of buying, I always think, because I'm a long-term, more of a long-term dividend investor. So for me, when I think, should I buy this? I don't see the value of it, right? Because yes, you're not going to be getting paid dividends. And the thing about it is, yes, this stock could easily hit $300 again, or that resistance here at 350. But the major problem that we're seeing with this stock is the short sellers losing interest in it. So the biggest value that GameStop had was these massive short squeezes, because the stock and company in general was really losing billions upon millions of dollars each year. Because they didn't really have that shift towards e-commerce. They really focused on their profitable brick and mortar locations, which at the time was really smart to really focus on those good locations, but they had to close thousands of stores across the United States. But the problem is other competitors. When people want to buy video games, the first place they're going to check is Amazon. Very rare are they going to go out to a store. So GameStop had to take the shift and focus on e-commerce. And that is what they're doing right now. They're focusing a lot of their energy on their e-commerce site, which, hey, that's fantastic. But the thing about it is they should have been doing this for years. So I think there is some move there, maybe with a little bit of some potential in the long term. But right now, it's just a little overvalued. I think a lot of people are thinking this thing's going to hit this $500 or $600 mark. And I think realistically, it's going to have a very, very hard time doing that, especially if we look at news articles that say GameStop is showing signs of weakness as short sellers lose interest. I think that's the biggest value that the company had is losing it, right? Not to mention that GameStop did actually sell a ton of their stock at about $300 and $400 a share, and they made a ton of money off it, and which is fantastic because they used some of that money to pay off some long-term debt, which good for you guys because you guys had to take on billions to get through 2020, especially with all the lockdowns. So in general, should you buy this? I think a good opportunity to buy would be, I know it's hard to say it, but anything under 100 could definitely have some sort of potential. But this is a company that is more of a higher risk, higher reward. And yes, I know that you guys are huge GameStop guys, and hey, I completely get it. And I just think that for me, being the type of investor and type of trader I am, I think that there's better opportunity elsewhere. Over the past week or so, it just hasn't done much. The past couple of months, consolidation, a lot, maybe a little more sell-off than a lot of things. Comparing that to, SPY, like the S&P 500, yeah, we had sell-off here, but if we compare the chart, it looks way better. You get dividends. It's a stable investment. Or even like Tesla, which a lot of people hate, but it's all about understanding that when you're invested in something, you're missing out on potential somewhere else. That's the biggest thing that I think a lot of people don't realize is they'll think, oh, I'll just throw $20, $30 in GameStop. But if you use that $20 or $30 in Tesla or the S&P 500 or Apple or something like that, which is a little more stable, you make pretty good returns. And if you still want to invest in GameStop, under 5%. So what that means is however much you have your portfolio set. So if let's say you have $1,000 in your portfolio, don't go more than $50. Have 5%. Use that 5% as some higher risk, higher reward investments, and you guys will be just fine. So guys, I hope you guys enjoyed the episode. And if you did, hit that like button, subscribe to the channel. It's just GameStop, it's a little higher risk for me. I still have a little bit of shares, but it's underneath that 5%. So I hope you guys enjoyed it. We will see you guys later. Remember to stay happy, stay positive, stay safe. Take care.